Hi everyone and welcome back to Stephan Livera podcast brought to you by Bold. American listeners, you can buy and sell Bitcoin at the cheapest rates and you can also get the best sats back on the Bitcoin debit card that's available over at getbold.io. Now joining me on the show today is Marty Kendall. He is from the, well, call it the project or the website microstrategist.com. Actually, Marty has some interesting stuff both in the nutrition world and also in the Bitcoin and treasury companies and LBE space.
I fall down rabbit holes easily.
Yeah, exactly. Worlds are colliding and all this. But today we're going to focus on the Bitcoin and treasury companies, LBEs, whatever you want to call it. First off, welcome to the show, Marty.
Yeah, great to meet you and great to chat. Love your work, and you've had a bunch of really interesting guests, and looking forward to chatting about this fascinating topic.
Great. And so I first saw some of the posts coming from yourself and the MicroStrategist side of it around power laws and kind of power law as applied with MSTR. So I know you're a bit of a fan, or you're into this whole world of data analysis and visualization also. So can you explain a bit for us, what was your fascination there around Bitcoin and power laws, and then go into the treasury company stuff?
I played around with modeling and data and systems back in 2008, and then everything blew up and I walked away and said stuff this, and I couldn't find a system that worked. And then I ran into the RFK at the Bitcoin Summit last year, and that was fascinating. I went, this is really important, and just fell down the rabbit hole, Sailor, everything, MicroStrategy, MSTR, True North, and then started to model it. And I came up with the ballistic acceleration model that had a nice prediction of what happened as Bitcoin rose and MicroStrategy sort of rose more because they were using leverage and debt and the ATM and everything that was happening at the time. And then I was posting under my Twitter account, and then Jürgen from MicroStrategist said, hey, can I put that onto my site? And then we sort of partnered up, and we're in the process now of building dashboards for a few of the major companies in the space, and then trying to get all this analysis that I've been doing in spreadsheets automated to help people, because it's just everybody wants, I want that graph updated every day, and I want to see everything moving automated all the time because everything's changing rapidly at the moment.
Yeah, gotcha. And so I guess zooming out a little bit in terms of just Bitcoin and the power law, where are you on that? Do you believe in that? Do you see that as a good predictive thing, or do you just how are you seeing that?
Everything that grows from a little thing into a big thing follows a log trend. There's nothing magical. It just enables you to extrapolate where it might be going, and the power law tends to adjust the latest data. So I think it's a really helpful way of knowing where it's going in the future. I don't think we're going parabolic or exponential, or exponentials can't last forever, and anything that does go exponential, which is very topical at the moment with the whole Bitcoin Treasury Company, things can't go exponential forever. They have to eventually tap out because exponential growth just gets extreme eventually. And I think that's something that most people don't quite understand. They draw a straight line through a exponential plot, and it just, some of those companies are on a path to eat all the Bitcoin by November, and
obviously
they can't all have
sense.
all of it all at once. So that's been the thing that's blowing my mind is what happens when all these companies are competing on a trajectory for all the Bitcoin in a matter of weeks. What breaks, who breaks first, and what happens when they slow down inevitably.
Yeah, and there's so many kind of areas we can go into, but maybe, I guess the ballistic model is probably a good spot to start here, right? So kind of, as I understand, you were trying to use, let's say, a power law version of an analysis to look at Bitcoin as contrasted with MSTR and how they would grow as the Bitcoin price goes up. And then let's say, assuming a Bitcoin price of, 150K or 200K, where would MSTR likely be? So maybe you can explain a bit on that.
Exactly. It was just on a log plot, a polynomial regression, and it had a really nice fit. But I suppose, and that's when I dove in, and MicroStrategy was everything, and could do no wrong, and everything was going up forever. and everybody believed that, and then it didn't after November, and mNAV fell from 4 to 2, and everybody's still bitching and moaning that, you know, my shares that I bought in October haven't passed my buy price from 9 months ago. But now I see, you know, companies at 10 and 20 mNAV, and people are going, this thing's going up forever. I was like, yeah, these things are great. They're fascinating and they're powerful. But, you know, if your company goes from an mNAV of 20 to 2 or 1, you're in trouble. So I think that I've been fascinated by how do we model that, and what I see is mNAV doesn't keep going up forever. Both mNAV and BTC yield sort of follow a power law down. They start high and then drift down as a company gets more and more Bitcoin on its balance sheet. The BTC yield has to necessarily go down, and that follows a power law. As it ages, it sort of tends down to, you know, yield tends to 0 and mNAV tends to 1 in infinite long term. So you can sort of use that to model it, and then knowing that Bitcoin tends to go up per the power law at about 30% a year, you can bring all those things together and model where it might be in a few days, a few months, and you know, have a bit of fun and manage your risk at the same time.
Yeah, and I think so much of this, it's very intuitive the way I'm thinking about it, because it's like diminishing returns. It's just kind of, obviously there's only 21 million, or there will only ever be 21 million coins, or a bit less than that. And obviously they're going to have to, the pace is going to have to slow down at some point. But I guess most of us are viewing this like, look, the gold rush is on now. And I think Saylor has said that himself, that, you know, there's this gold rush on right now that, you know, people have not realized there's a huge fiat arbitrage right now. They can borrow cheaply and buy Bitcoin, and Bitcoin is growing. I mean, on the power law right now, it's like 40% or something, but it's going to come down to, let's say, 30% over the next, let's say, 10 years, something like that. And of course, Michael Saylor has his own Bitcoin 24 model where he projects out what he thinks the price will be. You know, everyone can kind of argue exactly where we think things are going to be, but that's kind of broad sketches.
You can't predict the future perfectly, but you can say, you know, it's going up and to the right with some level of diminishing returns, and that's where everybody's gone, you know, not altcoins, not Bitcoin. I'm going, I want a bit more excitement, I want a bit more leverage with these Bitcoin Treasury companies. And they're just, you know, I watched the Tim Kotzman's 13-hour 42 guest speed Bitcoin Treasury Company speed dating episode. It's like, this is huge. Everybody's diving in, and some of them are really well prepared. Some of them are like, oh, anybody want to join me? I just started a Bitcoin Treasury Company. I need people. I need to work out how to do an ATM. I need international shares, and you know, it's just a really rapidly evolving area. So it's fascinating
now, the
to look
big
at
question
the data.
A lot of people will have, maybe more of a skeptic question would be, hey, how do you explain this phenomenon of premium to mNAV? So in simple terms, there's a market cap, and people are looking at, okay, what's the market cap, and based on of this company versus how much Bitcoin do they actually hold, and you know, why would such a, you know, mNAV greater than 1 be sustainable? Well,
I think the first question is, why is there an mNAV greater than 1? And that's because there's a Bitcoin yield, because every week they're purchasing more Bitcoin and adding more Bitcoin per share. But the thing is, as their stack gets bigger, Saylor's got 600,000 Bitcoin now. If he buys 1,000 or even 10,000 Bitcoin in a week, his yield can't be that high, and therefore the mNAV isn't that high. So people don't pay as big a premium for MicroStrategy now because their yield is lower. Meanwhile, companies just coming out of the gate buying 1 Bitcoin this week, and then 2 Bitcoin next week, and then 4 Bitcoin next week, and they're going exponential, and people that is worth a premium if they can sustain that, for as long as they can sustain that. But as soon as it starts to top out and that yield starts to slow down, their mNAV will shrink. I think that's the fascinating thing for me to model, both as an investor and, you know, I went all in on the ballistic acceleration model and thought it was going up forever, and then went, wait up, it doesn't. The mNAV does come down eventually as that stack gets bigger.
Right, and I guess what we saw maybe is in the, you know, earlier phase of this, MSTR was the only game in town, right? And then what's happened now is people are realizing they're starting to do this play. Obviously,
Totally.
people like Nakamoto, their thesis is, hey, let's do this in every jurisdiction. We should have one a MicroStrategy or a strategy in every jurisdiction. And then we're
there's
seeing
seed
this kind of
funding in
hot
every
flows.
market, every stock market.
Right. And then to your point, it's like a lot of the investors are kind of, let's say the high time preference investors are sort of quickly chasing for a pump because they realize, oh, hey, if I get in on the ground floor of these other ones, then they can get a very quick return. And that's, I guess that's that's kind of the mindset or driving some of this, this very high mNAVs. But I guess my question to you is more like, do you believe it's sustainable longer term? Like, do you believe mNAV greater than 1 is sustainable 20 years out, or 30 years out?
I think they're all... I see them as like the ones that pass through infancy, become teenagers, and then become adults, like Metaplanet and MicroStrategy. They'll have a massive collateral and be able to do the preferred play and replace the bond market. So that's a really, really powerful position, and therefore they will always be gaining an income from that due to the arbitrage between Bitcoin and the bond yield. So, say you're paying 10% for the bonds and Bitcoin's making 30, 40%, you're getting that 30% all the time, and you can put that back in to generate a yield, which generates an mNAV greater than 1. So in the long term, the ones that can survive into adulthood and get a massive Bitcoin stack will be able to keep an mNAV somewhat greater than 1, but maybe not that much greater than 1. But the ones that can't make it to the point where you'd go, I'm going to choose XYZ company over US Treasuries or MicroStrategy, those guys, are they going to survive? Are you going to choose to invest your money in them, trusting they're not going to go bankrupt? They're not going to be able to compete with MicroStrategy and Metaplanet, and therefore, maybe they'll be gobbled up by MicroStrategy and Metaplanet to get cheap Bitcoin at an mNAV of less than 1. Who knows?
Right, and I think Michael has publicly commented saying that he would not engage in this kind of M&A, but maybe some of the other treasury companies would do this, and maybe for them it would be accretive, right? Like imagine a bear market scenario, some of these other, maybe as an example, let's say Metaplanet, maybe in a bear market their mNAV is still greater than 1, but just not as high as it is now, and there might be some of these other ones.
Balance sheet.
And there might be some of these other ones who are below 1 mNAV, and they're like, all right, let me acquire them, and that's like an accretive operation. So we could well see that happen.
Yep. Yeah, the biggest companies with the biggest stack will survive, and the ones that are just, start off there's a lot booting off with a daily Bitcoin yield of 10, which puts them on a collision course with 21 million Bitcoin in October this year. It's like that can't continue, and eventually that will have to roll over. So that's the question that's fascinating me to model at the moment is what is the likely trajectory and what happens to the mNAV when that does roll over.
Yeah, and I think you made a good point around let's say the maturation, the life cycle, right? Like when they start, it's kind of one thing to be able to get, a great Bitcoin yield on your stack of 1 coin or 10 coins, but it's another thing altogether then as you evolve and you become bigger, once you become like an MSTR and you start being able to offer Strike, Strife, Stride, and let's say Metaplanet will likely do the same thing, and other companies in other jurisdictions will also, once they get to a certain size and scale, they will do that, and they will justify some premium to mNAV based on that because, hey, they're tapping this huge market. So that's, I guess, maybe longer term where they're going. But in the shorter term, we're seeing, these big, some of these companies
swings.
have very high mNAVs. And some of that is, I guess, being driven by investor hype, excitement. People are feeling like, hey, they can get in on the ground floor. And some of that is just kind of, I guess, excitement. But I think it's also fair to point out, and maybe you can explain this also, which is that as they there's a lot of hype as mNAVs rise crazy, especially for the smaller ones. That's when they can actually start using their ATM or similar programs to actually accumulate more Bitcoin and actually start to catch up.
Totally, yeah. And they can start, they get seed funding from investors, and if you're an investor that gets on the ground floor and it blows up because they just keep hammering it in the first few weeks and get a massive mNAV and a massive yield. Everybody, all the retail dives in, then they start to use the ATM. But if then the hype dies off and they can't keep that ATM going, and the ATM will bring the mNAV down towards 1, and then hopefully it'll sort of balance and people go, this is a bargain, I'm going to buy it back up, and it'll work itself out. But yeah, no, I'm totally enthralled by this, and I think there's a massive opportunity, but there's also, we need to understand the risks at the same time, as that, that mNAV can collapse quite quickly if people lose interest, or there's another treasury company starts with 1 Bitcoin next door, and it's just going to happen all the time.
Yeah, and
because
so
the new smaller one will be the fastest horse every time.
Right, and so I think we're going to see this phenomenon of kind of like hot money. People will just kind of quickly flip around. They'll kind of sell one and buy another and so on, because they're kind of chasing pumps. But there's also a fair point to be made that maybe there's a time frame question of who do you believe are going to be the long-term winners, right? Like that if you believe that, MSTR is quote unquote the blue chip of this space, and maybe Metaplanet is kind of going to be up there. Maybe some of these other big ones, XXI or some of these other ones who have a large stack that they can make it work. So in your view, as you're kind of looking, I know you're looking at all of these different companies across the life cycle. What do you see as the factors that make it work, right? Like where have they done, where are the ones that have done well, and where are the ones that have kind of, maybe they didn't execute it correctly? How would you distinguish that?
Yeah, I mean, I look at Metaplanet, what Simon's done as the textbook example. They've just held 0.9% growth per day, and that looks boring for the first 6 months, and nobody takes notice of them. But now they're buying massive amounts of Bitcoin as they continue up that exponential curve, and they can stay on that exponential curve for a whole lot longer before they tap out. And I'm doing logistic regression, which basically models a S-curve onto that growth, and there's no stopping them other than the limit to the Bitcoin at the moment. They're not rolling over yet because they've just held a sustainable yield starting from a very low base. Looking at 21 Capital, XXI that you mentioned, they booted up with a massive amount of Bitcoin, and their yield is never going to be high. So they're never going to compete as a Bitcoin Treasury Company in the same way to get a big mNAV, because they'll never get a big yield because they've got such a large stack already.
Right, because they're starting on a high base.
Yeah, they'll never be able to accumulate very quickly liquid. Sort of similar thing. They're starting with 117. That doesn't sound a lot, but they have to put a massive investment in to get any sort of significant yield. I suppose some of the other ones you see jumping out of the gate with 10% per day, you just go, well, that's fun while it lasts. But if you're a degen trader that just wants the quick pump and is ready to jump as soon as it starts to turn over and roll over, they're fun. But if you're a long-term conservative investor, you want something that's basically similar to Metaplanet. I think if other companies followed in Metaplanet's footsteps, I think they'd do well long-term to have a sustainable yield that they'll be around in 12 months.
Gotcha.
Not over and done within a couple of months.
The lead sponsor of this show is Bold, the banking platform designed for Bitcoiners. With the Bold virtual Visa debit card, you earn Bitcoin back on every purchase. The more Bitcoin you buy with Bold, the more sats back you get on the card. Buy $2,500 of Bitcoin and earn 3% sats back. Keep stacking with Bold to earn up to 10% sats back. Bold offers the industry's lowest fees on Bitcoin buys and sells with zero added spreads. When starting out, you can use Bold Wallet, which is managed by the team, but Bold is also supporting self-custody with Bold Vault, a 2 of 3 collaborative custody multisig for zero monthly fees. With Bold, you get your own FDIC-insured checking account to store and send fiat, pay bills, direct deposit your paycheck, and replace your legacy fiat bank. Sign up today and get zero fees on your first $10,000 of Bitcoin buys and $25 of free Bitcoin when you buy $100 of Bitcoin or more. Go to getbold.io. This episode is brought to you by CoinKite, the makers of my favorite Bitcoin hardware wallet, the Cold Card Q. Now, some people think self-custody is too hard, but it's really about taking responsibility for your Bitcoin wealth and understanding that self-custody gives you a true feeling of liberty. The Cold Card Q has a full keyboard and big screen. It's got 2 secure elements and a true air gap, allowing you to go fully air-gapped using QR codes from seed generation to transaction signing. You can power the device using 3 AAA batteries, so you don't even have to plug it into the wall for power. You can easily use it with Sparrow Wallet for PC or Nunchuck on mobile, and you can dial it into the right level of security and complexity that you choose. If you want a simple setup, just use 12 words and single signature. If you want passphrases, easy. If you want to add multi-sig or co-signing features, you've got those too. So go to coinkite.com, use code Livera to get 10% off on your cold card or other devices and level up your self-custody today. Gotcha. And I think it's also fair to point out here that not all mNAV is the same, not all BTC yield is the same. Like, we have to understand maybe there's things like the environment they're in, right? Not taking away from Simon or Dylan, but I would, as I look at it as an outsider, to me, Japan looks like an amazing, it's just an amazing jurisdiction for this, right? Because sometimes it's the tax advantage aspect of it. It's a big financial, center. The rates are very low, so you have this kind of yen carry trade dynamic that's going on there. So maybe they're just in a very good location also. And that's also been part of it, right? So it's not
all
just
the
that
stars have aligned.
So maybe they're just kind of, if you were to stack rank jurisdictions, maybe Japan is actually one of the best jurisdictions to do it, combined with obviously the skill and the talent of Simon and Dylan and the Metaplanet team, as an example. But I mean, let me make another example. The UK. So the UK, as I understand, now you tell me if you have a different analysis, but as I understand, there's this phenomenon there in the, I think it's called SIP retirement accounts in the UK, where they are not actually allowed to hold Bitcoin ETFs. Therefore, many, and I know Bitcoiners I know who have retirement accounts in the UK, they've told me they just went all in on MSTR and things like this. And that's why now perhaps we're seeing so much excitement around Smarter Webco, because they've just, because it's like the jurisdiction offered them an amazing opportunity. So maybe that's a slight counterpoint to your view that, going 10% out, 10% or whatever, because it's more just like the environment was right for them,
I just modeling where those companies will go in a few months. They can't continue exponentially forever. So
granted, I'm given that. I give you that for sure. But it's maybe more like certain jurisdictions are just so starved for an opportunity that some of these companies, when they start out and they're in the right place with the right time, with the right capital, the right team,
they blow up.
They can just kind of really quickly blow up because there's so much demand for this thing out there. Now, of course, there's only 21 million coins, so it's obviously got to level off, and obviously they're gonna, it's going to diminish over time. But I guess that's maybe the different philosophies or different ideas, right? Because maybe some people would have this idea, and maybe in Bitcoin land, people had similar debates. Should you DCA or should you just lump sum? Right? And maybe it's a similar comparison with these treasury companies. Should you just kind of maximize your stack out the gate, or should you try to actually, is there a sweet spot above a certain size, not too big, not too small, and come out the gate with the right jurisdiction and the right opportunity to then have the nice growth pathway?
Yeah. I just see Simon has just nailed Metaplanet at 0.9% per day and held exponential growth for 14 months. And I think that's the secret to longevity, is just having a plan and delivering on it every week, executing, maintaining the exponential growth, and then your mNAV stays high. So they'll be able to keep doing that until they hit 2.1 million or whatever their natural upper limit is. It'll have to roll over eventually, but it'll be a slow rollover without a massive mNAV implosion at that point.
I see. Yeah, and I mean the thing is, there's so many moving parts here as well, because we're arguably obviously, we're in a bull market now, or we're going into one. I don't know how people define it, but how would things look in a bear market? Like, will mNAVs all compress at that moment? Will it be kind of a Pac-Man? Big treasury companies are eating smaller ones. Will maybe the capital will dry up? Maybe they won't be able to get the same kind of funding. I mean, there's so many of these different moving parts. How do you bring that into the analysis?
Will the treasury companies just keep on buying Bitcoin hand over fist and stop the collapse? Because I think in previous cycles it was retail FOMO, high leverage. They got to the top of the power law range, like 99th percentile, and everybody jumped out at the same time, and you got a whole lot of stop losses, and that leverage collapsed. But really, these people call them leveraged Bitcoin equities, but they're not really that leveraged most of the time. They're just, accretive and achieving a Bitcoin yield. So that's sort of a leverage, but it's not really a leverage in the way you usually think of it, with a whole lot of borrowings that they're going to have to. The great thing about these companies, there's no margin call. You can invest in them; they go down, but there's no margin call. You don't have to sell them when they go down, but there is the risk of the mNAV implosion if they tend to slow down.
Yeah, and I think that's a fair point as well. People like Jeff Walton have pointed that out. Like, I think because the naive analysis would be, oh, look, Saylor's average of buying is whatever the price is, whatever it's 80,000 or whatever. And so the naive person might look and be like, oh, so if Bitcoin went below 80,000, Saylor's underwater now. That's kind of their understanding, which is sort of technically, but actually for there to be a problem. And someone like Jeff has run the numbers and shown, no, for there to actually be a problem, Bitcoin's price would have to go under $18,000, and it would have to stay there for like 3 or 4 years.
5 years. Yeah.
Before there's even any chance of a problem for them. Because
and
their
companies
debt
in the
is
S&P
right?
have got a lot more debt. Their debt to equity ratio is much, much, much higher, as we've seen, compared to what these Bitcoin companies have got. And you can see Saylor is obviously trying to manage that. So he's really highly collateralized, so he can run the bond play with the preferreds rather than pushing the debt and the converts as much.
Right. Yeah. And I think that's probably, as we said, that's kind of the longer term. So let's talk a little bit about mNAV erosion, mNAV implosion. Like, where do you see the risks then? Like, is it just if they don't execute correctly, where do you see the risks there?
Yeah, I see it as there's three moving vectors in this play. The Bitcoin, the Treasury Company price is Bitcoin times Bitcoin per share times mNAV, and Bitcoin's going up in a power law up and to the right, and the other two are going down and to the right. So a little company will start with a massive mNAV and a really high yield, and both of those naturally decay. So a smart treasury company is going to manage, you can't manage Bitcoin's price. You can't really manage the mNAV, but what you can manage is the rate at which you buy and the yield you're targeting. So like I said, Metaplanet targeting about 0.9% per day can continue to sustain and deliver for investors. And they say, this company delivers long term. And I can see this, I'll put a lot of my wealth into this company and I'll be able to sleep at night for 2 years because I know they'll be fine. Whereas, the shorter term plays with the much higher yield that they're targeting is maybe a shorter term play, and you've got to watch it like a hawk to see when they can't continue that rate of yield, that Bitcoin yield, and then the mNAV will naturally drop with that.
I see. So in some cases, it's like a high mNAV can be an indicator of excitement. It can be an indicator that this company has now an opportunity to use the ATM. But on the other hand of it, it can also be if the company is not executing, doesn't have a track record, or some other risk comes to bear, then that can mean sort of that company becomes quote unquote dead in the water. They won't be able to accumulate as well or as quickly as they were.
Yeah, and you saw what happened to MicroStrategy a few months back when their mNAV was dropping below 2. Sales said, I can't buy. Bitcoin was dropping. He couldn't buy any Bitcoin, so his yield went to pretty much zero for a little while. And he couldn't buy Bitcoin because his mNAV had dropped so far. And then they came out with the preferreds and, things are looking good again. But, if you're going to start a Bitcoin equity company, you need to have, these are the markets I'm going into. These are the tickers I'm going to provide all over the world. This is when I'm starting the ATM, and this is when I've got the preferreds lined up. And if your daily rate of growth, your Bitcoin yield is 10% a day, you better have that lined up in a couple of weeks down the track. You can't be going, oh yeah, we're working on that. Otherwise, it all happens very, very quickly.
Yeah. And have you done much analysis on the convertible bonds aspect of this, or not really?
Not so much. Yeah. I mean, MicroStrategy went into that a lot. And then I think everybody's shorting my stock because they buy it, short it, and this is no fun. So I think that the general consensus is that the preferred bond play is a better way to suck money out of the bond market from more conservative investors rather than letting it be an arbitrage play with the big hedge funds.
I see. And I mean, maybe it's kind of a balance, and people will sort of do some level of convertible bond plays and some level of, preferred share offerings and things like this to sort of balance things out there. And so then, it comes back to, I guess, when companies are, I guess you're looking at some of these different companies and trying to understand, do I believe that they've got what it takes to keep executing, or do I believe this company doesn't really have what it takes? So I think what I'm getting from you there is that if they really look like they've got a plan on how to execute, then that's a good indicator. If they do not, if they look a bit more amateur, or maybe they have not thought this through, that's on the downside. That's a down marker, or you'd give them less points for that. What else are the indicators that you would look at there? Like, you think if they're growing too quickly, that can also be that's like the Icarus thing. You're trying to fly too close to the sun.
You're flying too close to the sun. The wax is going to melt if you get too close to the sun too quickly. But by all means, people should jump into those and have fun. But beware that it's maybe not a long-term play. And I just lived through the great mNAV compression of MicroStrategy from 4 to 2, and you see these companies at 20, and you go, somebody's going to get potentially hurt there. So I suppose that's part of my messaging, is giving people the data to be aware of the risks and manage the risks versus returns. And just because it's got a ton of hype doesn't mean it's going to go on forever. It might go on for a bit longer if it's got a really hyped community, but that's where I frame it on the most popular chart that I publish pretty much every day, is that BTC yield versus mNAV, and anything down the bottom right with a high yield and a low mNAV is basically a bargain. If you can see a company that's consistently stacking and achieving a high BTC yield with a lower mNAV, then they're a great buy, because they're cheap, your risk is low, you're not going to fall if their mNAV tanks. But anything that's overhyped with a really high mNAV and a low yield is like, maybe you want to rotate out of that potentially to manage your risk.
Yeah, interesting. And so basically, you're looking at them as, I guess you might have a portfolio of these if you're looking at this, and you might look at, okay, how much am I going to weight to these different things? And I guess in this context, MSTR is sort of like the blue chip. They're the big, safe play, much safer play.
Stable, but they're not going to grow as quickly because they've got such a big stack already, so the yield's not going to go as high.
Yeah, and so then, like you're saying, the mNAV erosion is the big risk, and that would be more like, especially in a bear market, right? Like that could really sting, because you might, if you were buying the equity of these companies, we could be, the downside could be mNAV really drops really quickly, and the Bitcoin price drops really quickly. That could be a really bad double whammy factor if you if you're in that situation. And so that's kind of, I guess that comes down to, like, let's say bet sizing or position sizing of, if you're going to be looking at those really high risk plays, well then you need to size your position accordingly if you're going to do that. And at least the way I'm thinking about it is, I keep, most of my stuff is in Bitcoin cold storage, BTC, and then only a small part is where I would think about, okay, I'm going to look at some of these treasury companies. And so I think that's one way to look at it. Of course, everyone has to do their own, what works for one of us doesn't work for the rest of us. You have to think about your own situation. So let's talk a little bit about that life cycle component of these treasury companies. I know we've been touching on it, but it would be good to sort of talk through what is like a typical life cycle for these companies.
Yeah. So as I mentioned, the Bitcoin equity price is a function of Bitcoin, mNAV, and the Bitcoin per share, and they all move in a separate vectors. So when they're little, the Bitcoin price is Bitcoin price, but they'll have a high mNAV and a high yield because they're small and they can stack 1 Bitcoin, 2 Bitcoin, 4 Bitcoin, 16 Bitcoin, and just grow exponentially, which is very attractive. And that's fairly easy to do because you don't need a lot of money to do. To achieve that, you can just do that with early investor seed funding, and they can get off the ground with a massive mNAV, a massive yield. But eventually, as their stack grows, gravity kicks in and they come down the yield curve. And as long as they end up in the bottom left corner, like MicroStrategy, like strategy with a massive stack that they can then turn into preferreds, they'll be a great company for the long term. So in 5-10 years, they'll still be here and be the banks of tomorrow, which is really exciting. And I love this area just because I think it's a great way of taking fiat and mining it into Bitcoin. And you know, the sooner the better for me, because that makes, you know, money fair. At the moment, money's not fair, fiat's not fair, it starts wars. But yeah, but they will naturally follow that life cycle, and it's just a matter of having all your ducks lined up in a row, that you're going to have your early investors, your ATM, your preferreds, and then your hype cycle on top of that as well, and just executing relentlessly, as you see people like Metaplanet doing.
Yeah. And so then how are you thinking about this idea of constructing a portfolio of these treasury companies? Yeah. I know you've done some analysis on that. How do you see that?
Yeah. I've been working hard on, like, for myself and sort of our followers as well, to get to a point where there's a degen portfolio looking at just what's the highest risk reward companies, and if I want to get maximum returns, you've got the little companies that are just starting out. You're willing to take a risk, and they might blow up, and they've got a really high BTC yield and maybe a higher mNAV, but they're likely to go vertical. And then from the other perspective, it's that what I've been talking about is, you know, when do they look like they might be tapping out? When are they going to hit a ceiling? And that's sort of the conservative perspective, and that's where your MicroStrategies and Metaplanet and these other things kick in. So as soon as you see it turning over and reaching a ceiling, then you need to be more risk adverse, and the data can just give you a constant stream of information to be able to rotate. And if you're in the more conservative portfolio, you're going to be rotating less often, but if you're on the aggressive degen portfolio, you're going to be rotating quite quickly.
Fascinating. And I think it's just such there's so many different kind of elements to try and dive into, so it's kind of hard to even
fascinating
kind of
it's
understand
a whole new
all
world of finance.
Right. And I think what we're seeing is just this, you know, it's this huge arbitrage that most of the world doesn't really understand yet. And most of the world doesn't really have the same conviction about Bitcoin that, let's say, you and I and listeners of this show have. So I think that's part of the opportunity. And but totally. I think that also means you need to have the conviction to keep stacking during a bear cycle, right? And I think that might be the harder question. Like, what happens when a bear cycle comes? Are you going to be still doing the same analysis and thinking, well, this particular company, they've still been executing, they can still, you know, accumulate BTC yield, and therefore you might be buying some Bitcoin and also maybe buying some of those equities in a bear market because you think it's, you know, good value for money.
Yeah, I suppose it'll be interesting to see what actually happens with the bear market, because as will there be the same cycles? I think the cycles are different. I think it heavily depends on the government debt, and Trump just deleted the debt ceiling basically. So it's going to be interesting times for the next few months and years, and whether the Bitcoin Treasury companies keep on just buying Bitcoin up as governments keep printing money, maybe they'll get to a point where they'll try to rein it in again, and that will be the point where you probably want to be a bit more risk adverse and move to maybe the preferreds, and the Bitcoin Treasury companies will benefit because everybody's moving to preferreds rather than the equity as much.
Yeah, interesting. And so, yeah, I think I'm always cautious about the sort of this time is different because
yeah, for sure,
but I am long-term structurally bullish, obviously, on Bitcoin, and I believe there is some kind of an edge, a sustainable edge that these companies can have, assuming good execution and so on, and obviously with higher risk than just holding Bitcoin in your cold card. But I see that as they can access this cheap capital and buy Bitcoin, and so maybe this is also a good spot. I'm curious to hear if you've done any analysis on like BTC Talk and this concept of like what's dilutive or less dilutive.
Not as much. I just rely on the BTC yield, which I think is the most important factor, and also looking at the days to cover mNAV, which I've converted into a days to flippening, which is when the current value of the BTC on the balance sheet exceeds the current share price based on the vector trajectory of the mNAV and the BTC yield, which is a little bit more subtle than the pure days to cover mNAV.
Yeah.
But I think,
well, let's talk about that. So can you just, like, for listeners who aren't familiar, what is days to cover mNAV? And then we can go into that.
Yeah, so that's just a function of mNAV and the current yield. So it's log mNAV divided by log 1 plus yield, which just gives you an understanding of how long you'll have to wait until the Bitcoin on the balance sheet will be worth their market cap or their share price. So you basically reach a mNAV of 1 on your investment in X days. So for some of the smaller ones, it's down at 13 days. So as long as they keep on executing it, what they're doing now, you'll be covered, but it relies on them continuing to execute. And if they keep on doing that, you've got a rocket ship. But a lot of those, they can't keep going. Meanwhile, strategy is like 1,500 days. So you've got to have to wait a long time just because the yield is a whole lot slower. And therefore people go, I might rotate to a faster horse, and therefore their mNAV drops a little bit lower.
Yeah, I see. And so I think it's like people can choose to be as conservative or as degen as they like, right? Like the way I'm seeing it is kind of like, well, how would you explain that? Like if you're on the very conservative side, what would your portfolio look like versus if you're all like more of a degen?
Great question.
How do you see that?
Great question. Yeah, so if you're a more conservative investor, you want to see a long-term track record of consistent execution at a consistent level of yield. Go back to Metaplanet as the example at 0.9% per day. They're growing exponentially, and that can keep going for a very long time. Whereas if you're a degen, you're looking for the rapid gains, which you might be able to achieve with a smaller company that just came out, or you heard a rumor that this company is going to be turned into a Bitcoin leveraged equity through a pipe investor from some, you can jump onto that before it's even bought a Bitcoin and take it for a ride, and then jump off when you see it not delivering. There's, I think things like Metaplanet that are delivering consistently over the long term, they're quite secure, stable investments. Who would have thought that would, 6 months ago you wouldn't have thought would say MetaStrategy is the boring blue chip, but now it is. It's the one that's going to keep on tracking with a little bit faster than Bitcoin, but not a lot, whereas the other smaller ones are potentially going to go up like a rocket for a short time.
Yeah. And now, we've been talking a little bit about some of these, this BTC yield and days to cover and some of these metrics.
Yep.
What about like kind of more of a fundamental analysis, zooming out and understanding like, okay, some of these companies, they might become banks or quasi-banks or insurance companies or reinsurers in the long-term future.
Yeah.
And maybe that's, in that conversation, that's more like the MSTR and maybe Metaplanet, who are probably, and maybe XXI, who are going to be part of that conversation, because once we're talking 10 years out, 20 years out, maybe it does become like these become more like who can become the most let's say, reputable, sustainable bank or reinsurer.
Who's got the most collateral of Bitcoin on their balance sheet?
Yeah, and so then they can start, and I think
definitely.
MSTR is the most advanced on this conversation, obviously, because they've got Strike, Strife, and Stride, and who knows, they'll probably do more. So they will be able to just kind of tap these huge markets, and they will be able to generate, BTC yield from that. Now, of course, they won't be kind of this kind of crazy, early day mNAVs, but I think in the longer term scenario, the sort of 15, 20 years out, they'll be in a good position, won't they?
Yeah. I'm not sure I agree with Jeff that they're going to keep going up with a massive mNAV for,
right,
for the long term, but I think they'll be, once they get into the S&P, they'll do very well for themselves, and they'll be able to keep buying Bitcoin and keep some level of yield and some level of mNAV above 1, because they're recycling their profits into Bitcoin, which keeps a positive yield and therefore an mNAV greater than 1. So over the long term, MicroStrategy is going to be an excellent blue chip, and that Bitcoin, they are going to be the Bitcoin bank. Saylor doesn't like to call it a bank, but they're basically collateralizing the world in the future of money, which is going to be a massive position. I think the market is still open for smaller companies to get in and play that game and be the banks of the future. You could start now and just sit on 1% a day and be huge in a couple of years if you played it right and had all your ducks lined up in a row. But whether the smaller ones who just go off like a rocket straight up, whether they'll be the banks of the future, I'm not quite sure.
Yeah, I guess the game
stall out.
Right, and I guess the game is to sort of get past the filter, right?
Yeah. It's like just fascinating to watch. I can't look away. It's just fascinating to see what happens every day, to see as they stack more Bitcoin, and are they speeding up, are they slowing down?
Right, yeah. I think perhaps that is part of the race or part of the game, because that maybe they see it like, look, if we grow big enough, it's like, sort of fake it till you make it sort of idea, like not exactly faking it, but the point is, if you get big enough, then maybe you can start justifying these preferred shares. And that's maybe the longer term game for some of these companies.
It's seed capital, ATM, preferred shares, and then long-term longevity and survivability. But it's survival of the fittest, and there won't be 300 of these fighting it out in 10 years. There'll be big ones that'll consolidate.
Right.
Probably
yeah.
in each jurisdiction.
Yeah. I'm curious how you see that then. Do you see this as like there'll be a few big ones in each jurisdiction, or maybe one biggest one in every jurisdiction, or maybe the US can justify more because it's a big capital market?
Maybe.
Like, how are you seeing that?
Yeah, I don't know. I haven't really thought that through, but I think the ones that continue to execute and follow, avoid Saylor's mistakes and follow his successes will get there in the long term and survive in the long term, and people will lose interest in the ones that can't continue to deliver, so they won't be able to run the ATM. No one will buy their preferreds, and they'll just probably head to mNAV 1 or less, and they'll be acquired, they'll be eaten.
This episode is brought to you by Galoy, builders of banking software for the Bitcoin age. After years of risk and uncertainty, Bitcoin and banking are colliding. The regulatory environment is rapidly shifting in favor of Bitcoin and digital assets. Fintechs and crypto-native companies can become chartered banks, and traditional banks and credit unions will launch Bitcoin products. But the legacy core banking software that many financial institutions run on wasn't built for Bitcoin. The Galoy banking infrastructure stack delivers all the key elements of a modern core banking platform, with cloud-native infrastructure, event-based architecture, and robust APIs coming together to meet the security, scalability, and reliability needs of banks of the future. Whether you are launching a modern financial institution from the ground up, or you are adding Bitcoin-backed lending or payments to your product offering, talk to the team at Galoy. Visit galoy.io or reach out to the team at biz@galoy.io. Yeah, fascinating. I think it's so crazy to see how this all goes. So I guess now other people might take a view that lots of companies should all be doing this kind of levered, kind of going all in like strategy, versus there would be other people who see it more like no, it's okay. Like every company should be hodling Bitcoin, but it's another thing to actually try and do this kind of financial operations aspect of it.
Yep.
And so, I mean, the way I'm understanding it is I think, every company should at least hodl Bitcoin, right? Obviously.
Agreed. Agreed.
But the number of companies who will survive doing this, treasury leverage kind of strategies, there'll only be a few of those. And I think it might be like a few top ones in each jurisdiction, or at least the big jurisdictions. That's how I'm seeing it. Is that how you're seeing it, or what do you think?
Totally agree. I think every company should move their cash and capital into Bitcoin, and the smart one, like as Saylor said, it's only people who realize they've got an emergency that do it earlier, and the big ones are going, yeah, we're fine, and they'll suffer from that. And so every company really should move some or all of their cash to Bitcoin. The more you study it, the more you understand it, the more you motivated and believe and say this is the future. I've got to be all in, 121% all in,
like Alexander says.
Yeah, he's so committed and so passionate. I've talked to him a few times, and he's just an amazing guy. Totally sold out. I think he's who's more passionate, Saylor or Alexander? I can't decide, but he's unreal. But where was I? But it'll be the ones that can continue to deliver consistent BTC yield over the long term that will make it. And that is difficult. That gets really hard a year in once you're still stacking exponentially. The Bitcoin buys just get bigger and bigger and bigger and bigger. And, it was easy when you're buying 2 Bitcoin a week, and then you're buying 4, but then when you're buying 1,000 and 10,000 and 100,000, and you can't buy millions. So it has to slow down eventually. But it's that consistent delivery and a slow rollover where your mNAV won't implode rapidly and Bitcoin will rise and everything will be hunky-dory, rather than it just goes up and collapses. So I've got the popcorn out and I'm watching it every day, seeing what they'll do and how they play it. And maybe I'm wrong, and some of the little ones that are going up vertical will become the big ones, but we'll see how it goes.
Right. And how are you also thinking about the question of an operational business, right? Because this is also another thing that's come up. Some people are saying, it's a good thing if they've got some operational business other than the Bitcoin stacking side of it, because they can keep stacking in the bear market, or it's a way of differentiation for them. Versus other companies that are marketing themselves as like, no, we're a pure play. Like that's the goal is to just do Bitcoin accumulation. How do you think about this question?
Yeah, I've done a model fit score that looks at the relationship, the correlation between the value of their Bitcoin on their balance sheet versus their share price. So the ones that are pure play Bitcoin tend to have a much higher correlation than ones like Semler that have something else going on and complex issues, and people are, selling them because of some issue with the DOJ. But I think you're looking at Semler, I just think it might just keep on going up and cruising up because they've got a lot of Bitcoin and they can keep funding it and issue preferreds, and maybe they won't have the massive yield, but they might still be around in long term, versus the ones that just go, full on sprinting out of the gate in the marathon, and they either survive or they flame out. So I think having an existing business versus I'm just one guy in my bedroom and I bought a share ticker and here I am, let's go. So it's a different operation. You've probably got more stability, and you've got a legal team, you've got a CEO, you've got a CFO, and all the things you need to actually make it through. Right. So there's pros and cons. You're probably not going to grow as quickly, but you might be around in a couple of years. Yeah.
And so the other interesting comparison here is some of the big miners, right? So Mara as an example. And I believe there's one or two other big miners. Is it Riot? I think Riot is also on the... let me just pull up the Bitcoin treasuries. Mara have 50,000 coins and Riot have about 19,225 coins. So
and CleanSpark, Metaplanet just surpassed CleanSpark.
Correct, yeah. CleanSpark have 12,608. Yeah.
Yeah.
So how are you thinking about those? Is it that the Bitcoin mining company, the public Bitcoin mining companies, they've got this other business that is
Yep.
costly, or like how are you seeing that then?
They're mining Bitcoin, and that's the main operation. They may be stacking the Bitcoin, but again, they've got such a big stack that the yield is quite low, so people don't value them as a pure Bitcoin treasury play because they've got such a big stack. The yield is low, and therefore the mNAV is low. They just don't move up. People think, oh, big stack, good, but if you're wanting rapid returns, Mara's not going to give it to you. And Mara randomly buy and sell shares, so their fully diluted share count just moves around, and their Bitcoin per share goes down. You go, what the hell? Like, I can't model that anymore and throw it out of the mix because it's just not a pure play Bitcoin strategy.
Interesting. And the other element of it could also be over time as you become bigger. So, I mean, if we think about strategy, now they started as more like a, business intelligence, data analysis platform, and then they, did the Bitcoin strategy. And then over time, the Bitcoin strategy dwarfed their BI and data analysis business. So that nowadays, I think it's probably fair to say when a lot of people are looking at MSTR, maybe they're not calculating in as much on the BI and data analysis side of it. They're just looking at like their Bitcoin operations. So maybe it's a similar thing, like that if you do this strategy and you actually do become big, then people won't care as much about your non-Bitcoin operational business side of it because it's just very small compared to the big thing.
In a year, Semler could be, and Cooler could be seen as a Bitcoin company rather than a medical and a technology company because that's their main business and their yield, and they can keep on stacking at a respectable yield. But because they started big, like Semler put all their spare cash, I think 400 Bitcoin all at once, so they were never going to have a massive yield, so they're never going to compete with Smarter Web and the little guys that are just blowing up because they start from nothing.
Yeah, interesting. But I guess it kind of does look at, so in a way it's like, because they started small, they were able to kind of generate a lot of hype, and maybe that generates a lot of like retail excitement and investors, and maybe you get like a stronger community around you who kind of like, wearing hats with your company on it and doing podcasts about you, and maybe that's part of the dynamic, isn't it?
Totally. If share price is going up, people get really excited and they build a community. But I think as soon as share price starts tanking, how many true believers will hold, just because they love the company? I'm happy to see mNAV implode to nothing.
Yeah, it's
how
interesting
much
to
you
see
a true believer in the CEO.
Yeah, well, I mean, it's interesting to see. I think, like with the MetaPlanet example, right? Like they had kind of like I think they had an AGM or some kind of shareholder meeting, and it was like in a typical corporate room. I think you might have seen the tweet. 1,000. And then they had like this. It was like a huge conference room with like all these, rabid fans who are like MetaPlanet diehards because they got rich off it, right? Like I think people got rich off it, and now they love it, and now they'll wear the MetaPlanet hat, and they will promote it, and they will, there are people doing podcasts about it, and all this stuff. So that's one thing. I guess on the Semler side of it, you can see that Eric has, the company has made plays to, as an example, they have Natalie Brunell on the board. They have Joe Burnett now as the director of Bitcoin strategy. So maybe they're trying to start something up there. And who knows, maybe that will actually be successful and they will generate a community around that. But I guess that's the open question, right?
But because they got 4,000 Bitcoin, they won't go vertical like Smart Web. But I think if you're a conservative investor that wants a company that'll be around in a few years, they might be on the cards.
Well, it's like the turtle, the tortoise and the hare, right? Like that maybe they'll survive a bear market because they've got the medical business, and they will actually survive. And that could be part of the argument, right?
Yeah, I often think of that analogy, like the tortoise and the hare. Like it's going to be interesting to see who wins this Bitcoin Treasury game.
Yeah. Okay.
There's pros and cons of both.
Yeah. Now you've also got a post on how to spot the next MSTR before it moons. So I think that'll be an interesting one. Kind of a recent post from maybe 2 or 3 weeks ago. I think 22nd of June. Do you want to tell us a little bit about what you're getting at here in this post?
Yeah, I think that was just the model fit score to look at the correlation between the Bitcoin value per share versus the share price. And you see MicroStrategy, Smarter Web, people are valuing that as a pure Bitcoin play. So the correlation is much higher. So if you're in it for the, I love Bitcoin. If Bitcoin goes up, everything else will go up. They're sort of the companies you want to get into. Whereas Liquid and Semler and those sort of things have got a much lower correlation. Cooler have got a much lower correlation with their Bitcoin value per share. So they don't move necessarily with the Bitcoin price or the Bitcoin value. So that's part of my system where it's a factor to weed out companies that aren't moving with their Bitcoin value, and people obviously don't see them. They see them as just a company that owns Bitcoin rather than a pure Bitcoin play like Strategy and Metaplanet and Smarter Web these days.
Yeah, I guess part of that is just, market perception, right? Like is there the perception that they want to really go hard on Bitcoin accumulation, and that they will generate you a good BTC yield? I guess that's kind of bottom line. That's what they're looking for. Now, I guess this is another question, maybe more from the cypherpunk side of things, or more from the holding Bitcoin self-custody, right? Because of course in Bitcoin we have this kind of not your keys, not your coins aspect of it. So there'll be some people who sort of look at it thinking, well, why are you guys talking about all this Bitcoin yield? You don't get the yield. What you're owning is equity in the company. And maybe that's something. Now, I think there's different ways to go about that. Maybe the answer is, well, maybe if you really want Bitcoin cold storage, you should periodically take profit into Bitcoin, right? Like if you really are a true believer, then periodically really you might be selling some of those the equity you hold in a Bitcoin Treasury Company to buy more Bitcoin and put that into your cold card or into your multi-sig, right? How do you think about that?
Oh, yeah, I think it's very smart to have a significant portion in Bitcoin and maybe MicroStrategy preferreds, and taking profit out of the Bitcoin equities and putting that back across, because, just because it went up over the last month, it may not keep going up forever. So taking something and putting it into safe storage, that if you do get a drawdown, if your company does, for whatever reason, another company starts up in the same jurisdiction and eats your market, then, you're not left holding the bag. You've got some funds that are in safe storage away from the Bitcoin Treasury Company.
Yeah. Whereas I see maybe there are different schools of thought even here inside let's say the Treasury Company investors, because some of them see this like, just keep holding the equity or these other instruments, or do things like, I don't know, some advanced, option strategy to generate income off of that. Where are you on that? Do you agree or disagree on those kinds of ideas?
Oh, yeah. I tried to get into options when everybody was banging on about it with MicroStrategy, and everybody's making a ton because it was so volatile, but it went through the life cycle. They pumped it hard, peaked the yield, and then it really flattened out, and MicroStrategy's volatility's gone to nothing now. And from an options play, and therefore the converts, it's not an interesting play. And I think that's part of the reason that MicroStrategy haven't gone back to the converts, because they can't get a good rate on them because the volatility is gone.
Right, but that could also be a timing thing too, right? Like maybe right now with Bitcoin, as we record today, it's the 12th of July. Bitcoin is about 117,000 US. Now, if Bitcoin does some crazy move later this year to, who knows, 150 or 200, maybe then the volatility does come back.
Maybe. Yeah, but I think the volatility might be in the little Bitcoin equities rather than MicroStrategy. Like, I think they might be able to do high yield
convertible note offering stuff.
But I think MicroStrategy is going to stick with their preferred and stay. They're trying to market themselves to the bond market and the banks and the pension funds, and just say, we are the safe Bitcoin company. Trust your pension fund. Trust your preferred equity with us for the long term. And they don't want to. They're not marketing to the degen retail anymore.
Interesting. And so then, it's and that comes back to the life cycle point we were talking about earlier as well, right? Like it's maybe investors, seed capital, then ATM, and maybe convertible bonds if you can get a good rate on them and term the debt out, and then eventually you sort of morph into this preferred shares kind of offering because maybe that's the more mature thing, and then over time we'll see. I think this seems to be the idea that if credit rating agencies would look more seriously at these preferred shares offerings by MSTR and others in the future, that would really start unlocking a lot of these huge debt markets that exist out there in the world. There are so many people who want to, who are investing in things like government bonds. What if they started buying Bitcoin Treasury Company preferred shares instead?
You get 4.5% with US Treasury versus 8% with Sailors Preferreds. It's a no-brainer if you trust the company. And I think the way Sailors played it to go from high-risk degen options, converts, ATM, now I'm targeting the 300 trillion bond market. Absolute genius.
And that could get even more juicy if there's chatter now with, is Trump going to try to turf Jerome Powell out? Or is he going to leave on his own accord? Or maybe he just leaves, next year when his term is up. And are they going to try to lower the rates? And so then in the US government bond context, people are going to be getting even less than this 4.5%. They might be getting, 2% or 1%, right?
And what happens if the US government goes bankrupt and can't pay your bond back? And they downgraded.
Yeah. Well, I mean, I think most people would argue they'll never go bankrupt. They can just print more money, But
which is good for Bitcoin. Sad for the world.
Which is good for Bitcoin holders, of course. Yeah. But it's kind of interesting to see all these different dynamics. I think we've covered kind of a lot of different things. Do you have any, closing thoughts for listeners on, how to look at this space? Where are the opportunities? Where are the risks?
Yeah, I think look at the data, and I think it's groupthink is dangerous. People like to be part of the herd, but in retail investing, that can sometimes be dangerous. People want to follow the big pump and think it'll go up forever, but just because everybody's doing it in your X community, just because everybody in your little space believes this is the truth, then keep your eyes open, look at the data, look at when things are changing, look at when things are slowing down, look at what other companies are starting up around your favorite company, and manage your risk. Have fun. I think there's massive opportunities in this Bitcoin equity, Bitcoin Treasury space. I think it's going to be a ton of fun, and I'm just fascinated by it and trying to share my learnings and dig into it deeper and deeper and share the data. And so MicroStrategist on X, it's at Bitcoin Power Law is the handle. We've got mNAV.com and looking at starting up all the analytics tools and dashboards for companies and putting all the graphs that I've got and automating those. So there's Jürgen and Owen that are doing the programming and managing all that. So I think that's a massive area that I'm really excited to service, because I don't think anybody's really understanding yet, that coming to terms with how do these work, how do we model them, how do we manage our risk, how do we pick the best one, how do we rotate if necessary when things are tanking. I think that's just going to be the fascinating question over the next 5 years. And as you say, there's a gold rush happening. It's on, and Bitcoin's blowing up. There's no US debt ceiling. Yeah, Jerome Powell is moving out. We don't know what the timing is, but Bitcoin's going up forever, Laura.
Forever, Laura. All right, so listeners, links will be in the show notes. Follow Marty, and so it's microstrategist.com is the website. Yep. I'm a subscriber. I think it's cool. I've been having a read of the blog posts and looking at some of the analysis. Of course, follow online at Bitcoin Power Law. Marty, thanks for joining me.
Thank you so much. Great opportunity. Great to chat.